before we jumped on, you mentioned one of the first instances of it really affecting Arkansas.
Correct.
You heard about this year.
So we were talking, I'm on a subcommittee for wildfires through our national association, and learned a lot by meeting with some of those representatives from those western states. And just last week, after the fires we had out towards the lake, for the first time in my 34-year career, I'd gotten a binding restriction notice from one of our carriers due to wildfires. And so if we think about it and we think it's just a western half of the United States problem, it's not. They've had problems in South Carolina as well. So every state's probably going to have this issue at some point.
Thanks for joining us on another REI-NWA Podcast. This is episode number 61, and we're going to be digging into insurance for investing. As always, I'm your host, Colley Bailey, with Lone Rock Realty. And today, I want to introduce you to Brian Clinkscales.
Good to meet you.
Yeah.
Glad to be here.
Absolutely. We were just looking at the Fayetteville Library, the Center for Innovation here, and
it's pretty amazing.
Yeah, it's where we film all these podcasts, if you weren't aware, and yeah, it's an amazing facility. We've got 3D printers, a room over, we got a sound stage over there. We have so many cool things, but we're very grateful for being able to shoot the podcast here too. So before we get into all, and the insurance industry right now is getting so shaken up all across the country, but also here in Arkansas, and it's actually quite a few things that really affect our investors. And so a lot of questions I want to ask you as a broker. I'm running into things in deals all the time. Before we get into all the insurance stuff, just tell us who you are, where you came from, how'd you get into the insurance business?
You bet. So, as you said, my name is Brian Clinkscales. I'm with Boone-Ritter Insurance in Springdale, Arkansas. Been there for 34 years now. I bought the agency in 2002, and since then I've got 3 more locations across the state. We're an independent insurance agency, which means we represent several different carriers. Got into it. My dad was one of the owners of the agency when I was growing up as a kid. He eventually bought the other 2 gentlemen out, Mr. Boone and Mr. Ritter, where the name came from. And then he wanted one of his kids to come in, and eventually I didn't think it sounded real exciting and fun, but it looked like it might be a good way to make a living, so I jumped on the horse, and here I am now.
So some of the oldest businesses in existence are insurance companies.
Absolutely.
So definitely been around a long time and has a good pedigree, so good business to be in.
Absolutely.
Well, okay, so let's dive in and talk a little bit about some of just nationally. Let's just zoom out. So we've had fires all over, burning down California. We've had hurricanes just beating up the whole eastern seaboard. So, I've heard of insurance companies completely pulling out of certain states.
Yeah, that's correct.
It's crazy.
And you mentioned California. That's probably the best and worst example at the same time. They've had about every kind of weather event, but the wildfires have really caused a problem with their market. Yeah. There's a State Farm has several different companies within State Farm, and they have one that operates in California, and they're struggling right now, and they insure 20% of the California market, and it's a big challenge for them. I know the state's putting a lot of pressure on them. We can get into some of those issues if you want, but the wildfire issues are definitely a driver in the marketplace right now, especially in California, but across the western half of the United States for sure.
And before we jumped on, you mentioned maybe one of the first instances of it really affecting Arkansas.
Correct.
You heard about this year.
So we were talking, I'm on a subcommittee for wildfires through our national association, and learned a lot by meeting with some of those representatives from those western states. And just last week, after the fires we had out towards the lake, For the first time in my 34-year career, I'd gotten a binding restriction notice from one of our carriers due to wildfires. And so if we think about it and we think it's just a western half of the United States problem, it's not. They've had problems in South Carolina as well. So every state's probably going to have this issue at some point.
Okay. So from an insurance standpoint, is it something like you need an extra rider for this?
It's
how do you stay protected from that?
So right now in our state, luckily, no. Coverage is there. We don't have an issue with that. But in states such as California, and most people have probably kept up with, there's certain areas where the consumer can buy a homeowner's policy or a policy to insure something habitational that they own if they rent it, and they may not be able to get coverage for a wildfire exposure, so they have to go to the state fund that's there in California and purchase it through the state, and it's got some restrictions, and with the latest fires, that fund has went bankrupt. And so to kind of get back to, not trying to pick on State Farm, but to get back to that earlier conversation, when that fund exhausted all the money it had for claims, the way the California state law reads is that they can assess all the carriers that do business in California that write homeowners. So they come back to these carriers and say, hey, we think we're going to need X amount of dollars to put back in this fund to pay these existing claims that we already have. Well, State Farm, they do it by percentage. State Farm has 20% of the homeowners market. They got a call from the state and said, we need a check for $200 million. And the way the state law reads is, you've got 30 days to give us that check. So you can imagine an insurance company not having that kind of money budgeted for a loss. They've already got their claims they're paying on top of that. Now they have to write a check for $200,000. So there's and again, that's California, a lot of strange laws there. But that's the only way that market can exist right now. And luckily, Arkansas, we're not in that bad a shape, so we're still good right now.
That's good. So, I mean, yes, wildfire's not usually a problem here in Arkansas, but we had a tornado that ripped through Bentonville and Rogers, right through the main corridor.
Yeah.
And just...
You can almost count for the last probably 10 years, it seems like, we've either had a hailstorm affect our area, a tornado affect our area, or both. And we had one year where, so my agencies are concentrated in northwest Arkansas and central Arkansas. Well, one year we had a tornado that hit us in northwest Arkansas and then turned right around and had one that hit us in central Arkansas. And then on top of that, we had hailstorms later. So that year was just a total disaster for the insurance carriers, which obviously goes back to rate increases. But over the past 10 years, we've had some kind of weather event, whether it be hail or wind, that's really affected the entire state, whether it covered the entire state or not. It's impacted the entire state, which obviously has led to issues with rate.
Yeah. Well, and historic rainfall just recently.
Yep.
A lot of flooding happening.
Yes. And hopefully people know that on your base insurance policy, there's no flood coverage in existence. You have to go buy a flood policy separate. And a lot of consumers do not buy that policy unless they're got it financed and the mortgage company or bank says, hey, you're required to carry flood. And that's a tough one for us. That's usually the only time we write a flood policy. Very rarely do we say, hey, you don't have flood, do you want it? And a consumer says, oh yeah, sign me up for more insurance so I can pay more premium. Right. So that very rarely happens.
Yeah, I mean, and of course premiums are having to go up, not just because, of the random risks that are happening, and obviously a lot has hit, all, as we just discussed, all around the U.S. this last year, which is kind of crazy. But the properties that you're insuring are also now valued at a lot higher than they were even 5 years ago.
That's been a real source of trouble and pain for our industry, keeping up with the values. And, we deal within replacement cost values. So as fast as material and labor has risen in price, it's almost impossible for us to keep up with, hey, client A, do you know how much your home or how much this piece of property is worth now? I mean, we have some tools we can use to try to get a value, but we never seem to, the accuracy is probably 90%, not 100%, and it's the information you put in is what you get back, and if you don't always have the correct information on our end, then you might not get the right value. So it's very important to work with your clients to make sure you're getting the correct age of construction, type of construction, and quality of construction to try to make sure you get those values where they need to be, because the last thing you want to do is have a tornado take down a piece of property that you own, find out you're underinsured. Nobody likes that. It's not a good thing for anybody.
Yeah, absolutely. Well, okay, so I've got a deal.
All right.
That I've been working. And turns out there was hail damage on the roof.
Mm-hmm.
They didn't know about it. But because people are rarely actually on their roofs. And if you're not, when you exit and enter your property looking with eagle eyes,
it's very hard to tell.
Yeah, it's very hard to tell. So anyway, got to the point, hey, we're selling the house. Great, cool. It's got roof damage and needs to get replaced. They thought they had a $1,000 deductible. That deductible is now actually much higher than what they realized. I guess the recent changes.
Yes.
And it, instead of being a strict dollar amount, it was something like 2% of the value of the home.
Correct. Yes.
They were really caught off guard by this because it went from
$1,000
to now having to come up with $7,000 or $8,000.
Yeah.
Just to even get started in order to finish selling the house.
So that's a trend that's been occurring nationally for a long time, and Arkansas has been insulated from that, which is surprising given the fact that we have all the weather incidences that we've had with tornadoes and hail. But it is now going to be a fact of insurance for the consumers in the state of Arkansas. There's going to be a wind, hail deductible on almost everything that'll be a percentage. And you're correct, it could be a 1% or a 2%, but it's on the total value of that property, whether it's your home or a commercial building. So you can imagine if you've got a $6 million commercial building with a 2% wind hail deductible, you don't have much coverage on your roof. And there are a separate policy you can buy to bring those back down. But it's really been over the last 12 months we've seen the carriers change and start doing that. Now, what's supposed to happen is the carrier should send the client a letter. Let's say it's a homeowner's where maybe agents aren't touching that every year. And so they should get a letter from the carrier, no matter who it is, saying, hey, you need to be aware that you have a $1,000 deductible, but your wind hail deductible is a percentage, whether it's 1 or 2. On top of that, most of the carriers now are, if your roof is over 10 years in age, they start doing the depreciation on it. So not only will you have a larger deductible, you're also not going to get reimbursed for replacement cost of that roof. It will be depreciated. So now we have a whole new thing to try to worry about.
Yeah, so I've heard people, on the brokerage side starting to, and again, I'm glad to be talking to you about it because I feel like I'm talking to people who don't really know what they're talking about necessarily. But people saying, hey, if you're selling a house and it's got a roof that's 15 years old, they're going to have to replace it before they can sell it. And that's
exactly why they're bringing that up, because if you buy a property that has, and you're seeing this on the depreciation schedule is more on homeowners policies and what we call dwelling fires. So whether you've got if you're a consumer, you own a house and maybe 1 or 2 rental dwellings, those could possibly have that schedule too. We haven't seen it on the commercial side as bad. I won't say it doesn't exist, but it's not as common. But to your point, if you buy a property and the roof's 15 years old, if anything happens to that roof, whoever owns that house is not going to get much of a payout. And that comes from the industry and the consumer are both guilty of this. We've used the homeowner's policy as a maintenance policy for our roofs. Everybody just goes, well, wait till the next hailstorm, we'll get a new roof. And that's kind of how it's worked. Well, the insurance industry is like, hey, we can't keep doing this because, hey, roofs cost $10,000 per house on average. Now they're $25,000 per house on average. So, this has changed quite a bit, and we can't keep up with that pace. So that's kind of where that's come from. Not only that, the frequency that we have is also a driver in that.
So is there a chance that the buyer's insurance company would just reject coverage on a roof that's 10, 15 years old, even if it doesn't have
I think that's coming. I think we're going to see that. What I think you'll see eventually, and I know there's carriers that are working on this, and there's probably some that have already figured out a way to do it. I haven't seen it in Arkansas yet. I'm not saying it doesn't exist yet, but it's just not common enough where you're going to get an option. They're just going to say, here's your homeowner's policy, and if you want to buy $20,000 of coverage for your roof, here's how much it's going to cost. It'll almost be separate as an add-on to try to combat just the point you're bringing up. I mean, at some point, you're not going to have coverage for your roof. Right. So now, if you had a fire, it'd be different. But if it was due to a wind event like a tornado or a hailstorm, then you may not have coverage. But again, if you had a fire, that would probably go away. You'd still have your deductible and you'd get it paid for. Yeah.
At what point does it make sense to just put on as indestructible of a roof as you can?
A lot of people have started doing that, and here's the thing, and I hope no roofers get mad at me for saying this. When you get sold a roof, they tell you, hey, it's a 20-year warranty, a 30-year warranty. How many people have really ever went back to your roofer and said, hey, it's not been 20 years, I need a new roof, let me have one? I mean, it just doesn't happen. And so what the insurance industry has decided is it's really a 10-year roof. It's not a 20 or a 30-year roof. It's really a 10-year roof. So this is why we're stopping at 10 years and starting to depreciate. Basically telling you, the homeowner, after 10 years, you might want to start thinking about putting a roof on because yours has deteriorated over that time. Again, not trying to offend any of the roofers out there. I know they have a job to do, but that's really where that's kind of been born from. Yeah. But to your point, I think if we get to the common spot of now you'll be given a dollar amount you can insure your roof for, I think that will be maybe forces something to a more durable roof for the homeowner. They may want to choose to spend that money and get a metal roof or something that'll hold up better. I know there's rubber shingles. I know that's not the term, but
it's like a thicker,
yes,
thicker shingle.
Yes. And so, if I was building a house personally right now, that's probably what I would do to try to combat what's going on, because 10 years will go by like that, and next thing you know, you're depreciated on your roof on your home, and it could be a lot of money out of your pocket to replace your own roof.
Yeah. Wow. Well, we just dug into the roofing rabbit hole there.
This is all the good stuff, isn't it? Everybody's going to be happy about this.
But we've got a program coming up. This is going to be our main meeting. It's going to be on May 13th, 2025. That's a Tuesday. So come on out to the Hyatt House in Rogers. And it's going to be, like I said, our main meeting. So a lot of people should be there. Definitely an important topic to stay on top of these changes that are happening in the insurance space, especially if you have a lot of properties under insurance. You need to know how these changes are going to affect you and your portfolio. So come on out. Again, it's going to be May 13th. It's Tuesday. We'll open the doors at 5:30, mix and mingle for a little bit, and then Brian can get started around 6.
I can give them some more doom and gloom when that happens.
All right. Well, bring some sunshine.
I will. I'll do my best.
All right. Well, thanks for being on the show.
Absolutely.
Good to have you here. And thanks for joining us on this episode, everybody. We'll catch you on the next one.